Welcome back. You're still tuned into Power Breakfast, and let's talk about the big earnings which will be, really reacting today. So we have ITC, which actually missed both the revenue and margin estimate that the street was working with. So Mangalam is here with some of the details. Mangalam, this was a soft quarter, but it was expected to be soft, right?
It was expected to be soft, but the numbers that were reported were weaker than what the street was anticipating this time around. And why is that? Because of muted performance taking place in the cigarettes business. There was weakness in the agri and the paper business, which continued. But importantly, the FMCG business continued to do well, as did the hotels business. The net profit, that was aided by a tax credit and higher other income as well. So just to run you through the numbers, revenue was close to 16,500 crores. The street was working with a number of 17,000 crores. The EBITDA came in at 6,000 crores, a little over that. The street was working with a number of 6,400 crores. So both were a miss. The net profit, like I said, were aided by other income as well as a tax credit of nearly 500 odd crores itself. What was good in the numbers this time around? It was the FMCG business. Revenues grew at around 7.5%. The EBIT out there grew by 24%, marking the third straight quarter of 8.3% margins in the FMCG business. Hotels, we've been talking about how that business is doing well. So 18% revenue growth, 57% growth in the EBITDA. But agri as well as paper, both of them saw revenue declines and a bigger decline in the EBIT for the paper business. Now, the cigarette volumes that actually declined, or rather, was flat to a decline of about 2% in that range, as against expectations of 0 to 2% growth. And the reason why that happened is because, one, the base quarter had 15% volume growth, so you're going in with a strong base. Secondly, this is a vote on account that we're seeing. Usually ahead of budget, we see dealers stock up on cigarettes because they anticipate some sort of duty change, but because there's a vote on account, they're not doing that. And the third part is that mass consumption is struggling. Premium end is doing a lot better, and premium end does not account as much for volumes as it does for value. So those are a couple of factors. For starters, expect the stock to open in the red today.
Okay, Mangalam, thanks a lot for laying out all of those, big highlights from the ITC's earnings. But the other one